Thursday, it's July 10th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We bring this to you every Monday and Thursday morning, roughly around 8:30, 8:45 in the morning, talking about the markets, what they did, what they're going through right now, and what we could probably expect down the road as well, too. So here we are. We're on Thursday. We're on earnings watch, right? Earnings season is going to be starting next week, although we did get one big earnings report this morning from Delta Airlines. That was pretty strong earnings report and with good guidance. And they also reinstated their guidance for 2025. Stock is up about, it looks like about 13% so far this morning. You can see on the board here up on the top. Closed yesterday at 50.70. It's bidding 57 right now. So if you bought some calls on that thing, that's going to work out real nicely. But next week we get started with earnings from the banks. I think Tuesday, Wednesday, we get some names out maybe later on in the week as well, and a whole host of other names as well. So we'll find out tomorrow who's going to be reporting most of the week next week. Markets had a nice recovery yesterday, right? Don't dismiss that recovery yesterday. Even though the markets were down sharply on Monday and down a little bit on Tuesday, it was a nice move yesterday. Okay volume. Breadth was good. Small caps participated. So all in all, it looks like the market rally is going to continue for a little bit longer, and I'll show you a couple of reasons why I think that's so. S&P futures down about 3 points right now. We're struggling to get back to the green here. Dow futures down about 56. Again, we did have the airlines come out, so I think the Delta Airlines, and I think some of the transports are going to start moving on that number as well too. So I want to show you the oscillator over here. Nasdaq oscillator 144, up a little bit yesterday. Nice oscillator at 88, also up a little bit yesterday. Not quite to an overbought reading yet. We get an overbought reading when the Nasdaq is, say, about 200, 220. We're a little bit away from that right now. And the New York Stock Exchange is nice, about 150 to 170. Good, solid overbought reading. Makes the markets primed and ready for a little bit of a pullback. We're not quite there yet, right? Could be there today, tomorrow. I don't know. Early next week, we'll see. Let the cards fall where they may, and we'll figure out what to do when we get to those conditions. And remember something: an overbought reading is just a condition. It's not a signal. It's not a sign to say to yourself, "Oh my God, I have to start selling. We're overbought." We can stay overbought for a very long period of time, as we've seen for many, many stocks as well too. So I want to share a couple of charts with you. We see this one from time to time. It's not flashing too much of a buy or a bear signal right now. New highs versus new lows. This is the ultimate breadth indicator that we talk about from time to time. Again, how many new highs are being made versus new lows? And the differential there yesterday was about 72. We like to see it above 100. We did get a big 100 reading last week. That one over here. But we've come down a little bit, but still positive breadth is bullish for the markets. And this is showing you positive breadth, not in necessarily in what's happening during the day, but what's been happening over time. It's more of a cumulative effect, right? So if you get new highs being printed, it means the stocks have been moving for a long period of time to the upside to get to those objectives, right? Also want to show you the chart of the Russell 2000, which continues to perform very well. We're not too far from an all-time high, about 10% away. It's 220 something right now. The old all-time high is about 240. But look at this chart. I mean, what's not to like about this chart right now? I haven't been on board the small cap, so I've completely missed this move. I've been on other stuff, but still, look at this nice move of higher highs and higher lows. Textbook definition of an uptrend. We're above all the moving averages. We're ramping up against the upper Bollinger Band, which means that the volatility is starting to increase here as the bands open up. See, the upper Bollinger Band is opening up here, and the lower band right here is starting to open downward as well too. So that means it's just an expansion of the range that we're going to see. And look, the Russell 2000, for its part, has been one of the worst indices in 2025, and maybe summertime is time for this index to start catching up. However, when the expansion comes out of the range, we will see some downside eventually. I'm not sure. I'm maybe not today or tomorrow. I don't know. Next week, who knows? I'm not calling out when that's going to happen, but when the bands do widen out like that, we will see some two-sided action, which means we're going to see some up, we're going to see some down, and could be some very large moves on both sides. So for now, it's tally ho the fox. It's upwards from the bottom left to the upper right, which is our textbook definition of an uptrend: higher highs and higher lows. So that's the Russell 2000. And you know, I will tell you that the other indices making all-time highs, which is the SP 500. Last week, we didn't quite get there yesterday. We may get there today if the markets rally, but we did have a new all-time high last week in the SP 500 and in the Nasdaq. That is certainly some leadership that the other indices, like the mid caps and the Dow Industrials and the small caps, that is some leadership that these indices can lean against to start moving higher as well too. And as we get a broadening out of the rally, and broadening out means more stocks participating in the rally. And I'm looking at you, Russell 2000. That's 2,000 stocks, right? The SP 500 is only 500. The Dow Industrials is only 30. The SP mid cap is only 100. So I think you really have to pay attention to the broadening out of this market rally. Why is that so important? It means when more stocks are participating, it means when the markets do pull back, there's going to be safe havens that money is going to be put into in other areas. Semiconductors go down, money may move into the banks. Home builders go down, money may move into retail. That sort of thing going on, right? So we get money moving around, staying in the stock market, moving around to different areas, keeping the indices floating higher, or at least stagnating, moving sideways. Now, speaking of sideways here, I was looking at Meta Platforms the other day, and it had really had a nice base here built in June. It had a big move up in the early part of June, and it's been about 2.5, 3 weeks just going sideways, and broke out again. It pulled back last week, and it's breaking out again. Just got a price target up at $800 today. I think that this stock has really got some momentum here, and I think it's going to keep going and move forward. So another name that we've been on is CRSP. CRSP's had an incredible move up, huge parabolic move here. We've been on this thing since it was in the 40s. It's now $60, and actually I think it's ticking higher this morning. Let's take a look at that. Let's see here. Let's see here. Okay, CRSP. That's up another $2.50 today. So it's up into the low to mid 60s right now. So we have some calls on this thing. We're going to probably farm in some profits later on today. So that reminds me, right? When markets are going up like they were yesterday, and if we get some upside today, maybe even into tomorrow. And don't forget, tomorrow is Slurpee Day, 7-Eleven. Go to 7-Eleven and pick up your free Slurpee. I think they usually give them out for free on that day. But as markets are going up like this, you have to remember what you're supposed to do. And you're in this business, if you're trading, investing, or whatever, you're in this business to book profits. Period, exclamation point, end of story. Booking profits. That is what your job is, right? And if you're not willing to do that, you're gonna, that's fine, but you're going to end up on the losing end of trades most of the time. All right. So, whether you have a small profit or a medium profit or a large profit, taking profits off the table is your job. That you should be doing it on a regular basis, every single day, every couple of hours, multiple times a day, taking profits off the table, because there's going to be days where you're going to get shut out. What does that mean? Well, have you had a day where you had maybe only a few puts on, or maybe no puts on, and you had a whole lot of call exposure, and all of a sudden the SP futures are opening up down 50 handles, You don't know what to do. You freeze, and then all of a sudden you open up when the market open up your account when the market opens up at 9:30 Eastern time, and you're sitting there horrified as your account is getting slammed, and you start in 5 minutes you start feeling some regret because you didn't sell or didn't sell enough the prior day or a couple of days earlier when the markets were up and you had the opportunity to do it. Right. So I preach it every single day. I talk to the chat room regularly and re-instruct them what to do. Because when we're sitting there by ourselves, we certainly don't remember what the objectives are all the time. All we're looking for is new trades and new names and to put our money to work. And again, that's fine. But if you also remember that you're a risk manager first, managing your risk, have that risk manager hat on at all times. It's going to save you from days where you have a retreat. Who wants to be there working so hard when you take 2 steps forward and then take those 2 steps back and forth, 2 steps forward, 2 steps back? It's like being on a treadmill, right? You're not going anywhere, right? You get some exercise, but you're not going anywhere. So I think I implore all of you, use some good judgment. It's okay to take losses. It's really okay to take some profits. Okay. So keep that in mind over the next couple of days. I wouldn't say necessarily to get short this market, especially in front of earnings season. As somebody once told me many years ago, do you really want to be short during earnings season? And it's a rhetorical question. You can answer that yourself. For my answer, it's no. So I think that it's important to stash your cash a little bit. Have some firepower ready. You know, if you don't, if you're running out, if you have a gun and you're running out of bullets, what are you going to do? You can't shoot fire, right? So have some cash handy, have some protection on, keep some of your positions on, watch the market, paying attention, see what's going on in there. And if there's some opportunity there, then go ahead and take it. But certainly get in the habit of taking profits when you have it. Okay, that's my preaching for the day. I'm going to let it go. Have a great weekend, everybody. I'll see you guys back next week. I may not be on, probably not going to be on Monday morning. I'll be flying. I'll be in the air during the trading day. That's another warning for you. When I'm in the air on the trading day, markets usually get hammered. So protect yourself tomorrow while I'm in the air on Monday. I may be back on Thursday morning. I'm flying home early in the morning Thursday, but I may be able to be back in time for Daily Bites then. Possibly while I'm out of town, I'll be in Las Vegas next week. Possibly could have a Daily Bites on Tuesday morning. I might surprise you guys all. So have a great day. Have a great trading day. Good day tomorrow as well too. Good weekend. And I'll see you guys all back next week. And trade well. And if you're in the chat room, I'll see you there a little bit later. Thanks. Bye.
Move it to the ground. You had to be a big shot, did you? All your friends were so knocked out. You had to have the last word last night. So much fun to be around. You had to have the front page tight. You had to be a big